Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, welcome to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host. Glad to have you back. If you haven't done so, if you could please go ahead and subscribe to the podcast on your favorite channel, whether it's Stitcher, iTunes, iHeartRadio. There's actually 30 different channels. And also some great news coming your way. The website, realestatewithgarywilson.com, we're adding a profile page for all of these investor agents that we've been training around the country in 27 states. So likely your state is going to be covered. And these are not your typical run-of-the-mill agents. They're trained to work with us. Of course, I'm an investor, and they know how to identify properties, analyze them, negotiate them. Every single parcel in the country. There's no lot left available to us. Okay, they have the tools and strategies, and it's one of the best things we've ever done. We get lots of accolades on that. So feel free to go to the website, click on the members area, and go to the right. You'll see what to do to get in for free. And by the way, while you're there, grab all the videos you can, the books, the calculators, the spreadsheets, 100% for free. So. Right just in time for Christmas. How about that? So in any case, we got a really good guest today, Bharat Kanodia. Bharat, pleasure to have you on. I appreciate you taking your valuable time to do this.
Gary, thank you for having me.
You're very, very welcome. So if you wouldn't mind, you have such an interesting background and profession, a vocation that you're engaged in. But if we could start off with, would you mind giving us a little bit of backstory on yourself and how you got to where you are now? Because I think it's pretty fascinating. If you don't mind sharing that,
Oh, sure. The best things in life happen to you when you least expect them. Valuation was my first job out of college, and turned out I was half good at it. And that's where my network grew, and I stuck with it. So over time, I started valuing simpler things like machinery and equipment or factories. They liked my work. They asked me to do interesting infrastructure assets like roads, bridges, highways, tunnels. They liked my work there. Then they asked me to do commercial real estate. I guess I passed muster there. Then they asked me to start appraising large and small companies. And now I do the most difficult of them all, startups, which is just a wild card. I mean, any company could be worth anything if you're starting in the beginning. So, but I enjoy that. I enjoy giving people a range of what their most prized assets might be worth.
Yeah, well, it's a very valuable skill to have, and I say that because I know a lot of our listeners own businesses, and a lot of them are well enough off to, for one example, one of my clients just bought a brand new Lamborghini. Now, in his opinion, it's worth exactly what it paid for it, but of course we know better. But generally speaking, there's so many unique assets out there, and I refer to them as all assets, but we might use other terminology, I guess. But one of them, I guess, was like the Golden Gate Bridge in San Francisco. And on one of your famous videos is, how do you evaluate that? That's very unique, and the thing was built a long time ago. And does it have a value? Does it have a worth? So if you wouldn't mind, describe a little bit about what it is you actually do, when it comes to the process.
So people come to me, nobody wakes up one morning and says, I'm going to call my appraiser Bharat today. Gary, you own a lot of assets. When was the last time you made those calls?
It's been a while.
You call somebody like me when there's a need.
Yeah.
So people call me when either they're looking to raise capital, or they're in the process of raising capital, or they have just raised capital, or they want to give away equity to their employees. So startups or founders or investors. Or if somebody is buying a company, they want to make sure that they're not overpaying. Or if somebody's selling their company, they want to make sure that they're squeezing the last juice out of the other person. Not good or bad, that's just the way it is. And as a smart business person, that's what they should be doing. So people bring me in as consultant or as a third party opinion to just make sure they have the right price point in mind, a gut check.
Yeah. I tell you what, I've actually done that before too. I know you start off by stating that people will call you when there's a need, like a need being they're buying or selling something. But the reality is this comes up a lot, particularly in real estate, is let's just see what we believe it's worth before we do anything else. Let's take the first steps first, determine what we believe the true value is. Then we can make an offering. And then people will tell us whether they agree or disagree, or go higher or lower, whatever the case is, So now I understand you're in the Bay Area out in California, but with what you do, are you able to serve people? Like, let's say somebody from Toronto, Ontario, Canada calls you and says, hey, Bharat, I've just purchased this amazing yacht. It's 100 years old, original, teak and mahogany. And, we don't have any idea what this thing is really worth. We just picked it up because somebody had passed away. There was a big estate sale and we got that. So in that scenario, are you able to at least consult with them, or what would be the process? What actually happens next,
Great question. So, if there's an asset where you can find comps easily, for example, if it's an apartment building or a home or something or a lot, you don't need somebody like me. That's like, trying to kill a fly with a sledgehammer.
Yeah.
Why pay my fees? And then it's stupid. Even I wouldn't have fun doing it. But if you've got something interesting, like that land parcel you were talking about, something unique that, hey, there's no comp here. What are we going to do?
Right.
And you still want to buy it, or the other party is interested, and you're like, hey, I don't even know if this thing is worth 10 million or 200 million. That's a good point to bring me in, because then I can talk about that. Hey, where do you think this should be? Now, the yacht is a great example. I personally do not appraise yachts. I mean, I appraise a big variety of things, but I have not appraised yachts. That doesn't mean I can't do it. That just means I have not done it yet. But when people come to me with unique requests, I also tell them that, hey, I'm also on the board of American Society of Appraisers. So if I can't help you, I can find you the best appraisers in the country. So for valuing anything, Gary, I'm always looking to collect as many data points as I can.
Okay.
Right? So say, for example, that yacht. Okay, it's 100 years old. What do you think it might have costed them when it was built 100 years ago? All right. $1,000. Okay, great. We take that $1,000, inflation adjust that to today. What does it come out to? All right. Well, let's see. I don't know. It comes out to 500,000. Okay. So 500 is one data point. Then I'm looking at, okay, what do other similar yachts go for? Now, when I say similar, it could be an old yacht like this, same size, or could be a new yacht, not retrofitted to new specs, but similar in size, what they are selling for. Or another way you could look at it is, hey, if I build this yacht out and put in another, say, $2 million in this yacht, and I want to charter this yacht as a business on Chesapeake Bay, what kind of cash flow will this yacht be able to get to me? So my job is to open the client's eyes to as many data points as I can. Hey, what about this? What about this? So I'm always the guy asking questions. People bring me for answers, but that's the opposite. I ask more questions than I give answers. But my true talent comes in when I have 10 data points or 5 data points or 50 data points. I analyze that and I say, okay, which data points should we hang our hat on?
Okay.
Or what collection of data points, what weight should we give to each data point to come up with a value?
Yeah. Okay. Well, I know in real estate, it's just probably, well, I was going to say one of the easier things to evaluate, but I would say smaller properties, that's probably true, because the smaller properties, there's more of them. You have more examples and things like that. But with a larger property, like what you and I were discussing before the beginning of the interview, something like that, that's a world-class view. It's something people would recognize. If you showed them a picture on the TV, they would, hey, I know exactly what it is. Something like that, to me, there's not a lot of other comparable view or comparable properties with a view like that. And the other factor is, what's the, I guess you call it intrinsic value. What is the value of the view? How do you actually evaluate a view? Because that's essentially what people will be paying for. They want the land to build on, but they're building on it because they want the view. So any insight there, or any suggestions for people when it comes to something that's really a piece of land that's really unique like that? Maybe something overlooking the Hudson River, for example. So
at some point, Gary, it comes down to values in the eye of the beholder.
Mm.
Right? A sirloin at the airport might cost you $25. A sirloin at Morton's might be $80.
Mm-hmm.
It might be a different cut of meat, might be the same cut of meat, who knows?
Yeah.
So the way you analyze the view is, you think of different properties that have similar views.
Mm-hmm.
What are they going for? How much premium are the view property charging compared to the non-view properties? Or another way of looking at it, if this property existed on this piece of land, but the view wasn't there, what would you buy it for? Or what could you sell it for? Another way of looking at it. There are many, so I'm like a guy. So recently my water heater burst. So the guy shows up with like a barrel full of tools in his kit. So I don't have 1,800 tools like him, but I've got a good 50 tools in my kit. So I can use many of these methodologies. Some of them may be applicable, some of them may not be applicable. But my job is to ask questions so that I know which methodology to use here.
Mm-hmm. Yeah. Interesting. I always thought to myself, when it comes to situations like that, with something like a view, or again, like the Golden Gate Bridge, for example, it means different things to different people, and it has, to some people it might not have any value. To other people it might mean everything in the world. But what is the I guess most of your business is probably in California. I don't want to make any false assumptions here, but what would you say was the most exciting project you worked on, or the most interesting as far as having to be creative and resourceful in the evaluation? And maybe it could be something everybody would recognize too. So.
And I've been fortunate to have appraised some of the most unique and interesting assets in the world, like the Brooklyn Bridge, the Verrazano Bridge. I've appraised the entire thruway system. I have appraised companies like Uber, Airbnb, Yahoo. Have you heard of the I Love New York campaign? People wear that T-shirt, I Love New York. I have appraised the I Love New York campaign.
Wow.
So, I have done some unique assets. I have appraised dams. I have appraised the Alaskan pipeline that goes all the way from Barrow to Seward. So, give me something that nobody else knows how to do or touch, and I'll do it. I'm like the Statue of Liberty, right? Give me your hungry, your poor, and I'll make something out of them.
I love it. So, well, I do have to ask you, Airbnb is to a lot of our listeners has become quite an important subject in the last, since the COVID virus kicked in a year and a half ago, well, almost 2 years ago now. And one of the reasons is I believe it was last spring when Airbnb went public. You can now own stock in Airbnb. And so I have to ask, I don't know what you're allowed to disclose or not, but was your evaluation part of that whole decision for them to go public, or helping them determine when they go public, what should they offer the shares at? Or was it totally unrelated, or was it somewhat related, or?
So many of these large companies, there are so many evaluations for them, right? Could be evaluation for IPO, could be evaluation for investment, could be evaluation for tax purposes, could be evaluation for accounting. So it just depends on what the valuation is for. But I did not do the pre-IPO valuation for Airbnb. Had I done it, the valuation would have been significantly different.
Okay. Yeah, I imagine they did quite well. I've been watching that company since they came out, probably more than 12 years ago now. And we use it as part of our strategy. It's not a main strategy, but it's one of our strategies for our property owners. We have sort of we pulled back on traditional rentals. And so we use our properties now for alternative uses like destination travelers, which is what Airbnb caters to. And also corporate travelers, people, traveling nurses, traveling executives, even the filming industry. Whenever a film is going to be produced off site, all those people need a place to live. The grips, the musicians, the actors, the screenwriters, the prop people, the wardrobe people. It is a huge endeavor, and they don't want to be caught up in a hotel for 6 months. They want to be, in a nice place in a neighborhood sometimes. So we've been able to figure that out. So in any case, that's why we have such an interest in Airbnb. And what really was cool, I didn't realize, I never thought about the I Love New York campaign as being something of value. And I guess obviously it does, because it's been a huge boon for the city of New York for, probably most of my lifetime,
And that was the most confusing part, frankly, because everybody thinks that nobody owns it.
Yeah.
It's kind of like government of the people, by the people, for the people. Who owns that? The U.S. government. Well, the U.S. government owns everything that nobody else owns.
Yeah.
So that's not the case here. And then I thought that it was owned by the city of New York. Not the case either. It is owned by the state of New York.
Wow.
So, as I said, when I peel the onion to a point where I can't peel anymore. And when you peel the onion, it's fascinating, all the facts that you will unfold.
Yeah. Yeah. Now, has there been a project that you would say was that sticks out in your mind as being the most challenging, like the one that was like, boy, you're really, you're trying to peel back the onion, that process? Was there one that comes out that sticks out in your mind as being the most challenging?
Yeah, when I appraised the Golden Gate Bridge or the Brooklyn Bridge or the Verrazano Bridge, the first bridge I ever did was the Brooklyn Bridge.
Okay.
I had never appraised a bridge in my life before that, and I started with the Brooklyn Bridge.
Yeah.
I remember getting the prints of it. And going to the bridge like 15 times for a walk, and I'm like, how the hell am I going to do this? I'm just talking to myself. But hey, you're given a job and you got to do it. So I had to figure it out. But it was very interesting. It was quite the behemoth. It was quite the task. But it was fun. Again, how does a mouse eat an elephant? Bite by bite. So I said, all right, I'm not going to let the size and the stature of the bridge bring me down. I'm going to say that, okay, I got a small bridge, which is just going over the river. And that shape is like the Brooklyn Bridge. How would I do that bridge? Or don't even think that. How would I just do a regular bridge just going over a river? All right, let's talk about that. And then you build from there. Okay, what if the bridge was bigger? What if it had to do this? So many a times when I do valuations, there's no book that you can consult. And forget the book. There's nobody you can call either. You sort of have to look at snippets in different places and put it together in your head. And that's the best part of my job.
Yeah. Yeah. Well, it seems like as you were speaking, I'm thinking, okay, well, I've been on the Brooklyn Bridge. I've actually driven over it a couple of times, walked on it, and viewed it from different hotel rooms. And I'm thinking, well, you know what? Each of those is of different value, a set of values. So if you want a hotel room that has that view, that means something to you. But if you're living in Brooklyn and you got to commute to Manhattan, it's a completely different value. You could care less about how pretty it is. You just want to make sure that you can get across it. But you use it every day, so that use has value. And then of course there's the material cost. If you had to reproduce that today, I actually read a book about how they built the Brooklyn Bridge. It's actually was very dangerous work, and people did die building that bridge. And people got sick with the bends and everything. And but it's amazing the technology that they had. And there was nothing like what we have available to us today. And how they pulled it off is a quite miraculous story. and the story itself probably has value. Like the story of the Brooklyn Bridge probably has value, So
I sometimes, just cross over anything like this, and I am just always in awe. I'm like, oh my God,
yeah,
people built this, and not even today. Like people built this 150 years ago.
yeah,
without electricity. Like, okay, I mean,
yeah.
you really feel it brings you down to size.
Mm-hmm.
Like, oh my
Yeah.
God.
Yeah.
I talk big and I talk shit about appraising the bridge. Well, forget that. The guy built the bridge 150 years ago.
Right.
Yeah.
Well, let's do this, sort of switching gears a little bit. I'm thinking of some of the listeners, and I know some listeners are thinking, the ones that own businesses particularly, that also have the buildings, like they have a consulting business or a dental practice or a chiropractic business, and they own the building where there's 5 other storefronts rented out to 5 other business people, and then they have their own. Like what are the different ways to evaluate that? Because you've got the dental practice, for example, that probably be separate from the building, and then within the building, you've probably got maybe 2 or 3 different ways to evaluate that. What it's worth based on the income it brings in. What is it worth based on if you had to rebuild it? So can you talk about that a little bit for the people listening? Someone maybe who owns a little strip mall, and they run a practice out of there, and they have income coming in from other tenants. So there's some moving parts there. What are the? Can you break that down for us if you don't mind?
So, have you ever seen a ship being built, like an aircraft carrier, a ship being built in a shipyard?
Yeah.
The way they build it is they build small sections of components of the ship, and then they piece them together. So similarly, say if there's a strip mall and and it has got 10 retail fronts, and the owner owns 2 of them, and one of them he runs a dentist practice, and one of them he owns a restaurant. So if I were to be brought in, I would value the dentist practice independently. I would value the restaurant independently, and then the strip mall independently, accounting for the rent from all the 10 units. The only trick here is you have to ensure that the rent going from the dental practice and the restaurant to the strip mall is at market.
Okay.
As long as you make sure, if the rent is not at market, I'm going to adjust it to at market. If it is lower or higher, depending on how it is, but I just have to make sure the rent is at market, so I can say that, hey, even if somebody else were to rent it outside of the owner, the dental or the restaurant were to rent it from the strip mall, they would be collecting the same rent. So the value wouldn't be different. That would be the Achilles heel in that project. So yeah, I would just do it based on components. That, okay, I got to build a ship, but let's break these components down separately and just put it all together.
Okay, got it. Now, on a piece of real estate, just the real estate itself, like say someone's buying a home in Burlingame. Burlingame, for those who are not familiar with the Bay Area, is just underneath the city of San Francisco. Beautiful area overlooking the bay, and so they got this maybe like a Frank Lloyd Wright property there. Frank Lloyd Wright designed house. So you got brick and mortar. You got the view. So no dental practice, no rents coming in, just the building itself. What are the different ways, or what are the different valuations? Like, I don't even know how you would recreate a Frank Lloyd Wright designed house. I mean, he's no longer with us. I guess you could have his plans or something, but does that pose a unique challenge, or is it more straightforward? I mean, and I love those houses, by the way. That's why I'm asking. I've looked at them before, and you can actually buy them from the private owners, So
I enjoy Frank Lloyd Wright myself. I've been to both the Taliesin's, I've been to Falling Water, and I enjoy his work. Except all his houses, if you do your research, have a very, very sad ending. So the original owners were either killed with an axe or died of cancer. I mean, they all have very, very sad stories. And I haven't done any research on this, but I have a gut feeling that despite his awesome design, there was something off with the feng shui of his designs because they were really out there. His designs were the opposite of how the Romans built their buildings, right? I mean, the squares, circles, and all that, right? Everything is northeast axis and east-west axis. So his was the opposite. He threw all those traditional thinking out the window. But coming back to the point, if there is a house that was built by Frank Lloyd Wright and was up on the chopping block and it was up for sale, I would say that, all right, well, Frank Lloyd Wright houses weren't really built in poor neighborhoods. They were all built in nice neighborhoods. So what I would start looking at that, okay, of all the Frank Lloyd Wright houses that are closest to this subject house, what's the delta between that house and their neighboring houses? Right? That's the premium people are paying for the Frank Lloyd Wright house, apart from the square footage and all that, right? So if everything else is he is saying, how much extra are people paying for the Frank Lloyd Wrights? $1 million, $2 million, $5 million? I don't know. Yeah. So these are the kind of things you will start looking at. Once you find that data, then you see, okay, how is it different, say, between LA or Chicago or New York? Is there a difference in the pricing for the Frank Lloyd Wright house? Like people in Wisconsin are probably not big fans of Frank Lloyd Wright house because I know people who lived in the town of Plain, Wisconsin, where he grew up, and he was not a very nice person. Yeah. So they couldn't care for his house. But people in LA, Chicago, and San Francisco, they love him. So, again, you have to just see who the beholder is. What kind of people are buying them? Because I'm sure somebody like you who's a real estate investor is not going to buy it and put it on rental. I mean, maybe a Airbnb, but definitely not a regular rental.
Yeah. I would probably live there if I bought it. So I do know one that just recently was built in the last few years up in New York. On a beautiful lake. It was actually a new build, taking one of the original designs, and it was about a $20 million build. Pretty amazing place. So they had enough in the designs to the builders knew enough to complete the project without having every little single detail. But the overall design was detailed enough that they knew what to do. So pretty interesting project, Well, I'll tell you what, I know we're getting short on time here. I know a lot of people are thinking too, when's the best time to get an appraisal? And there's always the need, you're buying or selling something, but there's also sometimes you need to value your estate, and your whatever it is you have could be very unique in order to determine the value of your estate for different purposes. Like some people like to have very large life insurance policies, for example, and transfer things into trust. But are there any unique circumstances you can think of outside the normal, hey, I'm getting ready to buy or sell something, where someone, they really should get an appraisal done,
Business owners should get an appraisal done every year. And even though there is a conflict of interest in what I'm saying, that doesn't mean I'm wrong. Getting a valuation or an appraisal is similar to getting a report card or a scorecard at the end of the semester or end of the school year. Why would you care if you got an A or a B or a C? Well, you do care. Otherwise, how do you know where you are? Or what do you know where you can improve? For the same exact reasons, you should get a business valuation done on an annual basis. So you know that, hey, you're putting in 80 hours a week in this business. Have you actually created value?
Right.
And if you don't know, you should know. And if you don't think you've created value, well, you should be doing something else. Maybe real estate.
Yeah, there you go. Yeah. Or are there different for different industries and different sectors and different industries? Are there different multiples you use to evaluate? So, like a dental practice generally uses a multiple of 2 to 4, and an online, I'll give you an example. The guy that sold advertising.com to I think it was Yahoo back around after the tech crash. He got a multiple of 5, and he said afterwards, he said, Gary, I should have got a multiple of 10. And in our business, I'm thinking, gee, we're lucky if we get 3, you know. But is there a set of rules that tells you what a range of multiples would be for different industries when you're selling a business or evaluating a business?
Multiple depends on 3 things. It depends on the growth of the business, it depends on the profitability of the business, and it depends on the risk of the business. So if the business is growing really high, multiple will be high. If the business is very profitable, multiple will be high. If the business is risky, multiple will be low. So with real estate, the multiples, I mean, real estate is one of the least risky investments, right? Mm-hmm. But depending on how you have it set up, it's not exactly profitable, but it grows for a long time and you really own it. If you walk away from it for a month or two, it's not exactly going to fall apart like a business. That's why real estate is a fantastic passive investment, or stocks are a passive investment because you don't have to go and run those companies.
Right.
Whereas if you're running a business, well, you can't go on vacation for 3 months, or if you do go on vacation for 3 months, see what happens to your business.
Yeah.
So multiples can range anywhere. I mean, I've seen crazy multiples nowadays, anywhere from 1 to 200x. But the 200x are anomalies because that's all the tech bullshit nowadays that we deal with. But anything between 1 and 10 or 1 in 15, depending if you've got a legitimate business, is all fair game. And it all boils down to one of the things people don't talk about is when you do real estate, right? You generally buy the real estate and the other person gets to walk away because real estate is not exactly a moving object. It stays fairly stationary. If you don't do anything for a month, it's not going to dilapidate on you. But a business is very different. Business is a living, breathing entity. It's made of people. So there are too many permutations and combinations when it comes to a business transactions. There are a lot of deal terms, earnouts and interest rates and seller financing. There's so many terms that people throw out. And those are also part of the negotiation. Just the way when you're buying a house or something, right? Hey, are you getting an appraisal? Are you getting an inspection? Oh, we're going to waive all those rights. So that's all part of deal terms. Now you take those 3, 4, 5 terms and do times 20. Those are all the permutations, combinations in a business deal or a transaction.
Yeah. It's and everyone's unique. That's the interesting thing about this is every property, unless you're in a cookie cutter neighborhood where all the houses use the same floor plan. Those are boring, but really nice areas where there's more custom designs. Everyone is unique, when it comes to real estate. I mean, cars. My son worked in a place where they sold, restored, and stored classic antique cars, and he was the kid that got to go drive them, evaluate them, and appraise them and market them and all that. He got to drive a Vivian Lee from the what's the movie, the famous movie about the Civil War, Gone with the Wind, Vivian Lee, lead actress. He got to actually appraise her 1956 Bentley, and I said, well, are there other 56 Bentleys you can use for comparison? He says, not really. He said, Dad, this thing was chrome and spotless and had some unique features that she had built in that no other car has. So in any case, what a great job for a really lucky kid, So I told him, don't ever leave that job. And Andrew, I gave him my shopping list of what I wanted, Ferraris and Bugattis and things like that. So, hey, listen, I know we went over a little bit, but I'm pretty sure we've got some people intrigued here, and they probably want to know more about you or how to contact you because some of the folks that are listeners have some very unique asset. I know one guy collects swords from the Civil War and before. I mean, there's all kinds of, one guy collects guns, for example. So what's the best way, website, YouTube channels, things like that for folks to reach out to you,
Best way to reach out to me is go to my website. You will put the link in the show notes.
Yep.
And go to the Inquire Us or Contact Us page, or you can find my email on the website and just reach out. People call me all the time, or email me all the time about questions, and I'm always happy to answer. My philosophy is I keep paying it forward, and eventually the goodness comes back to me.
Yeah, amen to that. So folks, I'll give you a website here. If you, it'll be in the show notes, but just in case, if you're driving, want to write this down at the next stoplight, just remember Veristrat.com, and that's VERISTRAT.com. Okay. And then YouTube channel, youtube.com/what's it worth. Just remember, what's it worth? What's it worth? And that'll be the YouTube channel there. And in any case, those are one YouTube channel, one website you can check out, and give Bharat a call. I mean, every person we interview has been vetted. So as you might imagine, if you have valuable assets and you want the correct value, call him, and also for a great conversation too, by the way. So Bharat, thank you again very much for doing this. I know you're a busy, successful guy, and I know we're blessed to have you on. So thank you very much.
Gary, you've been most kind. Thank you so much for having me.
You're very welcome. For everyone else listening, everybody, God bless you and your families. We'll see you next week on the next podcast. Remember, check out Bharat's website, and also go to realestatewithgarywilson.com. Get yourself in contact with one of our investment agents around the country. And while you're there, grab some books and videos and everything you can get your hands on for 30 days. Okay, we'll see you next time. Take care. God bless.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.